The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we kicked off the week on Monday, the grain markets under pressure, soybeans and wheat, the downside leaders there. Outside, macro markets, somewhat quiet, mixed activity of the proteins. Here to talk about things with us, joining us for market analysis, Ted Seifert with Zaner Ag Hedge. Ted, welcome back to Market Talk, buddy. How are you?
Doing well, Jesse. Doing well. Thanks for having me. How are you, man? How was your first Father's Day?
Not bad. Not bad. Nice steak and shrimp dinner that me and my father-in-law cooked up. So
Cool.
I went and succumbed to the high beef prices at the grocery store and got a cut of steak, which never a bad thing. Getting a little beef in the diet, never a bad thing.
Hardly ever regret that, right? So
yeah. And nice thick strip too, from Costco of all places. So, hey, we'll take it when we can get it and we can throw it into the meal plan. So, I bet the cattle folks may be happy to see grain prices moving a bit lower on Monday. Kind of a tough start to the week in terms of just the money flow action in grains. It just felt like the money flow started overnight, went to the downside, and kind of just continued that way through much of Monday's session, Ted. Just not a great way to start the week, I guess.
yeah, it's really kind of contention between the current weather or like the right now weather or the weather from the weekend versus what we have the long-term forecast. You have, I'm going to say maybe some growing concern about the forecast going in through July 4th and pollination for corn. Obviously, it's going to be a really hot week here this week, but not without its showers. And that was part of the reason for the weakness in the Sunday night into Monday. We had some storms happening, like more than expected, I think. And, even through the day on Sunday, the night session on Sunday and through the day on Monday, there's some pretty substantial storms happening. So, we had the weather market for spring plantings. We added premium for that. Then we started to take some premium away. Corn conditions came out surprisingly good at 75% good to excellent. Now we'll see an update on that here today. But now we're wondering if we need to add that weather premium back in again or not, specifically for corn. Really not so much for soybeans. Soybeans, they can take and actually maybe prefer to have a little bit of stress early in their growing season, but their main deal is August. We all know that. But corn getting into pollination, that there could be a concern for that. So we'll be watching these forecasts very closely. Apparently, the way we traded on Monday, the market's saying that it's too early to get terribly concerned about that weather forecast. But there are some, analysts, weather guys. There's a growing number of people on like social media, Twitter and whatever, that are getting very concerned. But then again, Jesse, it's June 17th. This is the time where we get concerned about something. Not surprised we have people saying the weather's not perfect or the forecast isn't perfect. This is the time of year for that. So whether the market responds to it or not remains to be seen. We certainly did not do that today.
Well, and even Eric Snodgrass in our morning weather, he made the comment to me that the way planting kind of shaped up, corn pollination could even be a bit delayed this year. So there's a lot of, to your point, there's a lot of folks who are talking here, I think on both sides of the coin in terms of weather and whatnot. And it's just that time of year. Obviously, though, volatility, you mentioned this to me. I mean, we got July options expiration in this window. We got a lot of different things coming at this market here as we head towards 4th of July, plus the end of the month USDA numbers. So, I mean, how do we navigate some of this volatility here in the grains moving forward the next couple of weeks, Ted?
Yeah, absolutely. July is a big one, too. July option expirations, one of the bigger option expirations of the year, second to November beans or December corn. So look, that's something that will provide volatility to the market. And it's just, this time of year, weather market, these are volatile markets. This is when we expect them to be volatile. So I do think you really need downside coverage. I think this year is a lot different than what we've had the previous years. I'm concerned that if we don't have any, big crop issues or major weather concerns, that we could counter seasonally go a lot lower from where we are right now, rather than having our sort of typical summertime rally or first half of the growing season rally. So I think you do need some downside protection, but like using put options, or synthetic put by selling cash and owning a call, something like that. I think these are great strategies. From a volatility perspective, futures can be a little daunting, in climates like this. So there are other ways to skin the cat, so to speak, Jesse. So work with somebody to talk about the different strategies that are available. Mm-hmm. And then, to take it into, you mentioned the report at the end of the month. Man, I think there's going to be some pretty wild opinions about what the acreage numbers are going to say on that report. Quarterly grain stocks, that's always something that the sort of analysts like me and we'll be doing that between or behind the scenes, and it's not something that's like a big Twitter debate, because not everybody does the math on that or knows where those quarterly grain stocks should come out at, in order to prove or disprove that the USDA is on track. That can be a surprise on these reports, but that won't be what the big debate is going into it. It's going to be acreage. And so if you remember, planted acreage came in about 6 million acres short on principal acres than what we were expecting it to say, or like where we were last year. So where did those acres go? You can only put up so many strip malls and row homes, I guess. But, was there actually going to be more acreage out there than what the intention said? But then you put in planting delays, which, honestly, Jesse, although the 5-year average is skewed to the downside because of 19 and 22, we remained above the 5-year planting pace pretty much the whole way for corn and beans. So we say planting delays, and there are certainly areas that are still struggling to get things done, if they're going to at all. But overall, the big picture was, delays, I don't even think was really the right, from a national scale, maybe not the right word. I don't know. So that you're going to have did we see a bunch of corn acres shift to beans? What was that original corn acre really supposed to be in the first place? And so you're gonna have some really wild ideas on this report, and that report is a big one, man. That will set the tone really for the rest of the growing season. So yeah, between now and the end of the month, man, I don't know how you avoid the volatility. It's going to be there. You just have to work with it.
Well, and demand, too, is, of course, a big thing that we got to keep an eye on. You and I talked last week on Agriculture of America as well, as China had bought soybeans 3 days in a row from the U.S. of old crop, and now it kind of disappeared again. I think there's still some rumors out in the trade, but, looking at weekly export inspections, things like that, et cetera, et cetera. Demand, of course, for U.S. crops, corn's been good, but everything else has been lackluster, for lack of a better term, Ted.
Yeah, and corn's been fine. Some weeks have been fairly impressive, but it's not enough, right? We're going to be, I think, very likely. We're getting to the end of the marketing year here, Jesse. So we're very likely going to be over 2 billion bushel carryover, and that's a pretty large cushion for the crop going, or that is mostly in the ground now. And so for weather and things like that, okay, well, we got a 2 billion bushel carry in. So yeah, corn demand has been decent, but not enough to really get, put things in an exciting or an interesting place on a corn balance sheet. It's the beans that have been a major concern, in particular new crop beans. We have some of the lowest level of sales on the books for new crop beans that we've had in 10 years. And it's not good. You look at dryness in China, saying, well, they're going to need to buy some beans, yet they've got nothing on the books for new crops. You look at, Brazil might not have had the crop that the USDA says they have. Well, if that's the case, you should see a lot more buying from China in new crops specifically. And even for the flash sales that we have seen on old crop, it still hasn't really amounted to much. We have not seen a weekly export sales number that's really blown us out of the water, right? It's been hey, okay. And for this time of year, it's hey, it's great to see sales, but on the last WASDE report, the USDA lowered increased our current marketing year carryover. So we've got room to go, Jesse. Pour all those sales on we can get. And until we start seeing some pretty sizable new crop sales, it's really difficult to get excited about weather issues or, any of that. So, unfortunately, we're in the time of year where we focus on weather. We're at the time of year where we focus on the supply side of the equation. So all of the things that we just said about potentially very poor demand for new crop soybeans, that'll get swept under the rug here for a little bit. But that is sort of the looming, sort of daunting fundamental of the market that at some point, when we get past the major production concerns, if there are any, well, then we have to talk about the demand side. And that's not going to be a fun conversation unless it changes dramatically between now and August.
Ted Seifert with Zaner Ag Hedge, our guest analyst here today on Market Talk. Ted, a couple other things real quick. Let's go to the protein sector, cattle and hogs. We found some decent strength in futures Friday, and looked like we carried some of that through in the hog trade on Monday. Cattle was more of a mixed bag, but your thoughts in some of these protein markets? I mean, what stands out to you here middle of the month of June, Ted?
Yeah, we'll start with the hogs. Pretty decent day there on Friday, right? I mean, finally. At one point during the day on Friday, hogs had gotten down to like 14% on a relative strength index interday. It didn't end that way because of the reversal higher that we had. But man, I mean, that's not only an extreme case of being oversold for the hogs. That's an extreme case of being oversold for really any market. So from that perspective, we were due for some sort of value buying. We were due for some sort of, whoever been short since the middle of April basically had to take some profits at some point. And that was maybe the trigger for it. So that reversal higher looked really good. And then here today, we're following through to the upside, but we're well off of our highs. And that's, well, it's not great. I think the best thing that we can say for hogs is that maybe we finally reached a level where we can see some consolidation. Hogs are kind of a market that can put in some V bottoms from time to time. But based on today's trade, it doesn't really feel like we're going to do that. So hopefully this just means that we're going to spend some time, carving out some solid support down here before we do try maybe to go higher during the peak demand summer growing season or summer grilling season. But man, it's just been a bloodbath in the hogs. So we'll see. As far as the cattle are concerned, like you said, good day on Friday, and then you've got, corn down 6-7 cents during the day on Monday, but yet you have feeder cattle giving back some of Friday's gains. That's not a great feel either, right? I mean, this is, you feel like the feeder cattle had every reason or opportunity to follow through on Friday's strength and really have an impressive day here Monday, and it just didn't do that. So you wonder, if you look at the range that we've been in for basically the past month, with August feeders, the upper end of that range around 265, the lower end of that range around 250. You wonder if this is just a defined range here for a little bit. And as long as you don't have any, big break in the stock market, which, by the way, election year, between now and November, I would assume that the stock market's probably pretty safe. I mean, look, crazy things can happen, predicting the future, blah, blah, blah. But historically speaking, in election years, stock markets stay fairly strong. So, if that's the case, maybe we have some sideways trade here for the cattle complex, which honestly may not be terrible. From a producer standpoint, these are some fairly decent prices. I know a lot of guys would be mad at me for saying that because we always want to see higher prices. But, compared to where they were in 2019, for example, we're talking about some, significantly better prices. So, okay, with corn coming down, and cattle and feeders kind of sticking in this range, maybe that wouldn't be a terrible thing. So again, if you want to be really bullish, it's a bit of a disappointment that feeders in particular were down along with corn rather than higher following through on Friday. But again, I just wonder if we're going to be stuck in this range here for a little bit, Jess.
And finally, outside markets, macro picture, any thoughts for you there? I know, of course, the dollar's been moving higher since the Fed meeting last week, things like that. Any notes for you in the outside markets, Ted?
Yeah, I don't know. Summer is a time for inflation a lot of times, Jesse, and I wonder if that's going to come back into the markets. I don't think we're going to see any higher interest rates. Although, okay, personally, if I'm the Fed, I could justify it. I don't think we'll see that before elections. call that what you will, I suppose. So in in an environment without higher interest rates, so just flat interest rates, I don't think we're going to see a reduction either. But I do wonder if you're going to start to have these inflationary talks coming back into the market once again. In particular, look at crude oil. Pretty good day on Monday after a consolidation week last week, but it was a consolidation up at recent highs, and then following through the upside here Monday, with trade back over the 50-day moving average. So, if we're using crude oil as a canary in the coal mine when it comes to, relative strength in commodities and so on and so forth, I mean, you had to like that look. That being said, when we talk about grains markets, they don't necessarily have to follow along with all the other commodities because we have this weather market. We have these big, some of the most important fundamental inputs of the year are happening right now. So, that a lot of times overrides any bigger, broader picture. But I would say I do think the broader picture commodity landscape is slightly to moderately positive, really for commodities as a whole.
Ted, good stuff, buddy, as always. If folks want to reach out to you there at Zaner Ag Hedge and have a conversation, take a look at all the different stuff you guys have online, et cetera, how can they get in touch with you, Ted?
Yeah, you can reach me directly. My direct line is 312-277-0113. Aside from that, you can find us on the web at www.zaner, that's zaner.com. We got a whole bunch of new stuff and some other stuff that we're going to be rolling out pretty soon. I do an afternoon recording. It's just 5 to 7 minutes of me just kind of winding down the markets. And then beyond that, if you are on the X Twitter platform, I am at the Ted Spread.
Ted Seifert, Zaner Ag Hedge. Always good to talk with you, buddy. Thanks for being with us on Market Talk this week. We'll talk to you again soon.
Thanks, Jesse. Always a pleasure, man. We look forward to talking to you soon, too.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.